is the big corporate earnings. Wipro met street expectations with its Q2 numbers guidance. There was a disappointment. Joining us now is the company's management and our very own Kritika Saxena. Kritika, over to you.
Thanks for that, Shireen. My first question, as always, to TK Korean. TK, the guidance obviously is much lower than the lowest estimates that analysts had set for you. Is the seasonality that you're seeing in the next 2 quarters more pronounced than it has been over the last 2 years?
So, Kritika, again, if you go back to our guidance, I think it's an important point that I wanted to kind of stress again. Our guidance for Q3 is really based upon 2 factors. Number 1 is seasonality, and that's really driven by 2 things. Furloughs as they come in. For the first time after many, many quarters, we're seeing that our demand outside of IT is more than our demand from IT. In the past, we've been able to predict our demand from IT very well. We have not, in this particular case, we're a little uncertain about what furloughs mean for business demand. That's one of the factors. The second big factor is that we are going through some transitions at some of the customers where we have won some consolidation deals. Most of the transitions that we're going through today, while we go through the transition period, we don't accrue any revenue. After the transition is over, we'd probably start accruing revenue. And to that extent, that lag we see in Q3. Those are the 2 things which are impacting our guidance for Q3.
Okay, fair enough. Jatin, a quick question to you. Margin band has been fairly strong this quarter given the fact that you have seasonal pressures. But going forward, what is the target band? Because typically you would prefer to remain above the 21% band, but it's much lower this time.
Yeah, Kritika. So if you see, our Q2 had an impact of 2 months salary increase. We had given our salary increase on 1st June, so we had consumed only 1 month's increase in Q1, and we had 2 months impact left to be consumed in Q2. So we have taken that impact, and even after taking that impact, we have kept the margin in a narrow band in Q2. So Q2 has been a very satisfactory performance. Now, as we look forward, as you are aware, Kritika, we don't guide on the margins, but if you look at the way we have performed over last few quarters, we have been able to keep it in a narrow band. And as we go forward, we feel confident that we have sufficient levers that if we execute well, we should be able to keep it in a fairly stable region, our margin outlook, and that's how I see it going forward.
Okay, fair enough. Saurav, last quarter when I spoke to you indicated that there was an upside to utilization and there was room to be able to inch up utilization above 70-odd%. It's at 69.5%. I know it's at that little bracket of 69.5%. When will you be able to go back to the 71% level?
I think, the answer to that, Kritika, is pretty simple. I don't think we're expecting to do that in the short term. The reason is that one of the big changes that we took in terms of decision over the last quarter was to start retraining a large bunch of people that we have today from legacy skill sets into digital skills. So this year we've clearly guided that we're going to train 10,000 people. That is a conservative estimate. We may end up doing more. But while we go through this period of retraining, we are going to take a hit on utilization. Having said that, we think we have enough levers in our repository to make sure we're able to manage the margin. So that's broadly what we are planning to do. So I don't think that you should expect a big uptick in utilization over the next quarter. And as we go through the next 2 quarters, you'll see that improving.
And just to add, TK, to that, Kritika, you're right, and I had mentioned this. So we have seen 3 quarters of continuous growth, and this is a very conscious decision this quarter where we have made investment. We have increased our hiring. You've seen 6,000 plus ads, primarily to drive as TK said, looking at making the investment in our digital business and training people. And as TK has called out 10,000 people to be trained, it's a very conscious decision. So that's the way you should look at it. And long-term, very clearly headroom to move forward, as TK mentioned.
Okay, so for the next 2 quarters, you will stay within that 70% range or below that 70% range?
We'll remain
very, very small band.
Yeah, on
Okay,
small
fair
band.
enough. TK, I wanted to understand from you, the top client continues to be under pressure, and this is something that you'd indicated would bounce back in this particular quarter. In the next 2 quarters, will we see the top client or the pressure on your top client gradually bouncing back?
So I see the top client pressure continuing till the end of Q4. We see it bouncing back probably in Q1. Last time when I made that comment, I was reasonably certain that we would do that. Unfortunately, it's not happened. And we expect to see that bouncing back not earlier than Q1 of our fiscal.
Yeah. So it would be fair to say that the next 2 quarters are more sluggish than, or rather the performance will be more sluggish across IT industry versus the last 2 years. In that case, tell me specifically what are the key pressure points that you're watching out for? Is energy one of them?
So here's what it is. It's, from our perspective, we don't necessarily see it that way. Because the way we see it is that we have won deals, especially consolidation deals, new deals, and as we go through the process of liquidating that, we expect to see revenue coming back. But I think more importantly, there are some sectoral issues that we have had most of last year, and which has been the oil and gas segment. We've seen the oil and gas segment kind of bottom out. We will probably see marginal growth coming back in the next 2 quarters, and then we'll see a significant bump up after that. That's at least our estimate of the way we see the market kind of evolving. So overall, I would say that probably I'm a little more bullish about oil and gas than I was maybe about a quarter ago.
Okay, let me go to Jatin with a key question. Energy was a key vertical to you, but we have now seen your closest competitor, one of your closest competitors, Infosys, making a large energy acquisition. Is the market now getting tighter? Because there was a point that Wipro was the clear leader, but there is evident competition now.
Yeah, Kritika, so fundamentally we retain the market leadership position in energy vertical, and in fact, if I may, suggest that we did an acquisition of much larger scale in 2011 when we acquired the energy oil and gas vertical of SAIC in June 2011, and in fact the benefit of that has been clearly spelled out in the tougher times where we have consolidated out our competition and retained the market share and wallet share within energy vertical. Even when the total pie was shrinking, we were acquiring market share. So I think we remain a very strong position player in energy segment, and I am reasonably confident as the money starts coming back into the sector sooner than later, we would benefit disproportionately compared to other players.
Proportionally. Okay, fair enough. Saurav, a quick question to you. Can you break up attrition for me in this particular quarter? Because we don't have the exact figures with us. And what is the outlook? Because next 2 quarters are seasonally weak. Definitely, would attrition inch up further in the next 2 quarters?
So, Kritika, attrition for us for LTM basis is flat or marginally down. And if you look at over a 6-quarter horizon, we have been operating attrition in a very narrow band of 1% plus. And as far as Q3 is concerned, seasonally it's a slow quarter from an attrition perspective. So we see that it will be a better quarter for us than what it is in Q2. But I'm very confident for the full year also, and we don't guide it, but it will remain a narrow band. Predictable attrition and narrow band is what we want going forward.
All right, last couple of questions to TK. TK, you indicated in the press conference that there is evident pricing pressure in larger contracts. Will that continue now? Is that the new normal?
Oh, absolutely. I think competitors is the new normal. So fundamentally what will happen is that as all of us in this particular segment, as we start eating share from some of the global majors, you are going to find pricing pressure coming in. But I think the beauty of our business is that we have enough levers today to make sure that we keep margin where we want it to be. So that's the positive. The headspace that we have is much more than the headspace that many other competitors have, primarily driven by a huge push into automation. Just to give you an example, last quarter we've taken out, last half year, we've taken out almost 3,000 people from our existing base who we are now retraining on digital technologies. And we just think that we've scratched the surface as far as productivity is concerned. There is lots of headspace available as far as that particular lever is concerned.
Okay, fair enough. So would it be fair to say in that case that in the next 2 to 3 quarters pricing pressure will continue, and by when will it rebound?
I don't think it'll ever ease out for commoditized business. So, the market has actually segmented itself into two very clear areas. There is the transformational digital deals which are out there. On that segment, we see no pricing pressure. That's about creating a value proposition proactively and going and selling it to the customer. There is almost zero pricing pressure on that end. Then there is the regular services that all of us used to sell for many, many years, where clearly we see people are going after that segment, and pricing is one lever that they're using, primarily because the differentiation in that segment is very minimal between companies. So that segment is under pressure. The second segment is under pressure. The first is not. So if you look at Wipro itself as an organization last quarter, our pricing has actually gone up last quarter. So from that perspective, I would just kind of build in enough into the run book business that we carry to make sure that we have enough cost levers to take out costs on a regular basis and get ourselves to be more productive. On the other hand, whatever money we make here, we must reinvest that money on the digital side of the business to make sure we give that business a flip when that business really starts taking off. So that's broadly the strategy.
Okay, fair enough. Completely out of time, TK. One last one-line answer from you. Europe's been low from the last 2 quarters. By when will that bounce back?
The minute oil prices come back and we start getting our growth back in oil and gas, that Europe will be back.
Okay, so there's some time now for sure. Thank you so much, TK Kurian, Jatin Dalal and Saurabh for speaking to CNBC TV 18. Shri Nayantara, seems like despite clear pressure, there is a sense of confidence as far as Wipro management is concerned.